So in this video, I'm going to talk about dividends and how to pick stocks that pay good dividends, or how to find stocks that pay good dividends. And in my opinion, the importance of dividends. So first of all, what are dividends? When companies make a profit, they will pay a portion of their profits to shareholders, and that portion is called dividends. Obviously the rest is invested back into the company, but that portion that is decided that will be paid out to shareholders or owners of the company. And obviously when you buy a share of the company, you become a part owner of the company, a shareholder. So you get dividends just for holding shares in that company. So on average, a good dividend yield will be between 3 to 5% per year. So if you can get a stock that pays 3 to 5% per year dividends, that's very good, because just by holding the stock, you're collecting, or you're making a return on your money more than if your money was in a savings account, and even more if you were investing in mutual funds at the bank. Usually over time, mutual funds will generate an average return of 4% per year, and that's considered a good thing. So the benefit of dividends is, while you're holding stocks, not only can you make a gain on buying and selling, so a capital gain, but you can also collect dividends while you're holding the stock and waiting for the stock to go up so you can sell it and make that capital gain. So there's many ways to search for stocks that pay good dividends. You can use Questrade, you could use any online brokerage from a bank. I used to use Google Finance, but their interface changed a lot, so I don't use it anymore. So in Questrade, if you want to look for good dividend stocks. So when you log in, it brings you to the trading account right away, trading platform right away. Just click on trading and go to market research. It gives you this page right over here, which, as you can see from the bottom, it's powered by Morningstar. Okay, automatically it shows you the biggest gainers and losers of the day, separated by Canada and USA. So you can see the biggest gainers in percentage today are these stocks over here. Shopify is one of them. If we look at losers in percentage, you got Second Cup, for example, lost 12% today. Most active is Novus Energy. So that means something's going on, or something will happen. Either it's going to go up or it's going to go down. So if we click on create a screener, so it brings you all the stocks on the Canadian Stock Exchange, and then you could sort by dividend by going into valuation here. So you have tabs here. So the dividend column will be under valuation tab, and just moves a little bit slightly to the right. Click on dividend yield to sort from highest to lowest. So here it shows you in order of highest dividend yield per year. So obviously 314%, that's just false. It's probably a penny stock or something that paid a dividend once. So the yearly dividend yield has been calculated at 314%. So the big yields I would ignore. I would look at lower than 20%. But if you have a stock that pays a yield over 10%, most likely it's not going to be sustained. Eventually it's going to get cut down. So under 8%, if you can get a stock that pays 8%, that's amazing. But under 8% is where you should look at, just to make sure that they'll be able to continue paying this rate. And you can move the columns, as you can see here, drag it. So for example, this stock here that I bought pays a dividend yield of 20%, but it's not paying it right now. It's suspended the dividend yield until its net asset value reaches 15. It's a great mutual fund. I talked about it in one of my videos. It buys Canadian banks and is able to pay out monthly income by selling covered calls, which is something you can do if you have a lot of shares of a stock. Let's say 500 or 1,000 shares of a stock. You can apply the strategy of selling covered calls in order to generate a steady income. So that's the strategy that they apply, but they don't always pay those distributions or those monthly dividends. But when they do, it's pretty high, usually around 15%. So as you can see from the forward dividend yield column, there's no expected payout of the dividend. So that's why don't get attracted by high dividend yields, because they don't usually last. So here's another stock from the same company, DFN.to. So this is a good one. This has been sustained for many years, and I think they've never missed out on a distribution. So this one pays 11% per year, and the stock trades at around $10, and it's been trading at around $10 for a very long time. So it doesn't move much, but it pays very good dividends per year. I mean, it pays 11% per year. That's a great return, even if you don't buy or sell, even if you don't sell the stock, getting 11% per year on your money is very good. So you got Kanoe EIT Income Fund. pays about 10% dividend per year. This is a good one. It's very sustainable. You could look at the past performance. Cominar is one of my favorites. But you see, when I bought Cominar, it was paying 12% per year. And then I sold it when it started paying 9%. And look at the forward. The expected dividend yield is 5%. So it's dropping again their dividend yield. So if you're really looking for dividends, I would suggest dfn.to. These are stocks that I would personally buy. And eit.un.to. And I actually bought df.to, but it's a little riskier because the dividend yield is higher, and they're not paying it out right now, but eventually they'll pay it out, and hopefully it'll make up for the missed months. You've got many more. You've got a lot of REITs that usually pay high dividend yields, so real estate income trust. So let's click on the second page, see what there is. We've got Nexus Real Estate Investment Trust that pays 8% per year. So you could do the same research, but on the US side by clicking United States. So while I'm on Questrade, I wanted to talk about the interest that people think Questrade is charging if you're converting from Canadian to US, or if you're holding Canadian money and you buy a stock in US and Questrade automatically converts for you. Some people are saying that Questrade charges interest. So here I'm just going to show you that it doesn't. So if I go to my accounts, well, it doesn't in a TFSA or an RS margin account. I'm not sure. I don't use margin accounts. So account activity. So if I go back, let's say as much as I can. So let's say January or December 2015, and I click on TFSA. As you can see in the categories here, there's no mention of interest. Trades, other, dividends, deposits, FX conversion, withdrawals, fees, and rebates. So in a TFSA, they don't charge interest. If you hold Canadian money and you place an order on a US stock, it'll convert for you automatically without charging you interest. So you could use Yahoo Finance as stock screener. So just Google stock screener and anything here. Let me pick anyone that shows up. People talk highly about FinViz. Personally, I use Investor's Edge stock screener. Like I said, I used to use Google Finance's stock screener, but it's unavailable right now. So let's try Yahoo Finance stock screener. Create new screener. So you could choose your region. So let's add Canada. So we're gonna have US and Canada. Now I don't like small caps, not even mid caps. Let's do large and mega. Price intraday. Let's add another filter. So we need dividends or yield. So here, look up dividend. It's called last close indicated dividend stock price. So let's check that out. Lows, where did it go? Okay, greater than. So let's say 3%. And let's find stocks. So there you go. Here it gives you a list of stocks, large and mega caps that have yearly yields above 3% on the Canadian and American stock exchange. So here's giving you and it's sorted in highest market cap. 500 billion. ExxonMobil's got 300 billion market cap, and it pays a dividend of above 3%. Now I'm trying to look for the column with dividends, but I don't see it. So let's say we click on a stock. It's gonna give you here the dividend rate, 3.92%. So ExxonMobil pays out a dividend of 3.92% per year if you buy it at this price. So I bought Exxon at 75, so it's profitable right now, but I'll probably sell at 80 or higher. And while I'm waiting, I'll be collecting dividends. And by the way, dividends are deposited directly into your trading account every 3 months or every month, depending on the stock. Most stocks pay out their dividends every 3 months, so every quarter. And the only condition is you need to be holding the stock before a certain date in order to get paid the dividend. So you can actually hold the stock for a few days and get paid for the dividend as long as you buy it before the record date, which you can find that information just by Googling, for example, Ford expected dividend payout. So as you can see here, expected date. So Ford pays 15 cents per share. It's about 5% per year. So as long as you own Ford shares before April 20th, you'll be getting dividends of 3 months on June 1st. So if we look at Kraft Heinz, a stock that I bought at 75 and trading right now at 61, but I would definitely recommend to buy some more. This stock pays a 4% dividend right now. Expected dividend date March 8. 1 year target estimate 76. Oh my, I bought it at 75. 75 billion market cap. 52-week range is 59 to 93. So yeah, when you look up a stock, it usually, wherever you look it up, whether it's Questrade or Investor's Edge or Yahoo Finance, you'll get information on the dividend. Sometimes the dividends do change, so just look it up on Google, for example, like I did for Ford, and you will get the projected dividend payout. Now if I use Investor's Edge, They have a pretty good stock screener, pretty simple. So if I pick Canada, market cap greater than 500 million, let's say, dividend yield greater than 3%. I got 126 matches, and I still can't sort by dividend. See, on Google Finance you were able to sort on dividends, and Yahoo doesn't seem to allow it. If anyone knows, please mention it in the comments. You can filter and everything, but can't sort on dividends, so you can see right away every stock pays how much dividends. Alright, so let's say I short on market cap. Royal Bank being the biggest, TD, biggest market cap, Bank of Nova Scotia, Suncor, and the famous Enbridge that's killing me right now, that I bought at 50 and it's been trading at 40 for a very long time. But it actually pays a pretty high high dividend, sorry. If we look at Snapshot, it pays right now it's paying 6.49%, which is amazing. So this is definitely a buy for me. So if we go back to Stock Center, Stock Screener, Canada market cap greater than 500. Let's do dividend yield greater than 6%. Let's see what we get. We get 39 matches. So Enbridge is on top. Got Interpipeline, Ryokan Real Estate Investment Trust. It's a very good one. What is it trading at right now? 23. This is definitely a good buy. Enbridge has an income fund holding, pays 7.95% yield per year. Market cap 5 billion. 52-week range 26 to 34. It's trading at 28. Interesting. So let's look for a stock screener that allows us to sort on dividend, or at least show us a column for dividends. Let's try Finwiz. It's ugly, but maybe it'll give us what we want. Screener. Yeah, I've used this before. Market cap. So let's do large. Dividend yield above 5%. So where's my dividend yield? It still doesn't want to show my dividend yield. Price, change, volume. Let's see how much dividends L Brands is paying out. 6.62. This is interesting. There's more news here on Finwiz. This is actually a pretty good one. Maybe the layout isn't so nice, but the information or the content is good. 3 blue chip yields of 3 to 6% to dump immediately. So this article is saying sell L Brands. This is actually a stock that I was going to buy. Profits shrunk from 1.25 billion to 980 million in just 3 years. Still making a profit though, very high profit. Okay, they're saying to dump it because it's not going to be able to pay that high dividend. It's still a good stock to buy in my opinion. Alright, so Finwiz's stock screener also does not give us does not show us the dividend yield column. Now there must be an option to add more columns or to remove columns. I'm going to go back to Investor's Edge. Greater than 5% yield with greater than 500 million market cap. View 65 matches. So I've got 3 columns here. Let's look at performance, fundamentals, estimate. There we go, dividend yield. But I want to see market cap. Well, anyways, they're all above 500. So in order of yield per year. So once again, Kanoi EIT comes up again at 10%. You got Chorus Entertainment pays 17% per year. So that's amazing. Now we would just need to see how sustainable is this 17%. I think I'm going to add EIT to my watch list. 11.72. Wow. 52-week range, 11, 12. 1 year, 5 years, trading close to 10 in 2016, and then after that pretty consistent at 11. So maybe at around 11.25 I'd buy this stock. What is it at? 11.72. Definitely a great stock, consistent. See, look, Yahoo Finance says that it doesn't pay dividends, but of course it does pay dividends. So that's why it's always good to check different sites. The information is not always up to date on all sites. Usually the banks and Questrade's brokerage account will be up to date. So just want to look at Chorus Entertainment. What's this stock about? So market cap 1.4 billion. Out an annual dividend of $1.14. So it paid this dividend once, but obviously we don't know if it's going to keep paying it. Yield 17%. So let's Google Chorus Entertainment dividend. So the next payment will be May 31st if you're holding the stock on May 15. So look, this looks like monthly dividend. So latest declared dividends, May 15, June 15, July 16. So every month it pays 9 cents a share. So percent wise, let's give us 17% per year. Chorus Entertainment, 52-week range, 5 to 14. Interesting. 1 year. Wow, it dropped hard. So let's look at reports. Fair value 837. So maybe a good stock to buy. Maybe not put too much money into it. It dropped pretty hard in the past years. Let's look at its revenue or net income. So 224 million in 2017 net income, a billion revenue, $1.5 billion revenue in 2017. It had a bad 2015. It lost money, but revenues are going up though. Net income is not consistent. Let's look at it quarterly. Yeah, not consistent, but profitable. Revenues are also not consistent. Maybe they make more money in a particular season. 40 million on 369 revenue, so about 10% of the revenue is profit, which is pretty good. Let's look at it annually. 192 on 1679. This is higher than 10%, 11%. Yeah, I think I would buy some of this. Let's maybe just visit the website. Based out of Toronto. Okay. It would be hard for this company to just go bankrupt. Portfolio of 39 stations, so a leader in conventional and specialty television. So they own all these channels. They own Global, HGTV. Movie time sucks. Treehouse is not bad, but I mean, who's watching TV anymore? Alright, so this is a stock I'd consider. Maybe in my case, I'd put $500 maybe, from $500 to $1,000. But I'd probably place an order at $6. Alright, so to find good dividend stocks, just use the screener in either your Questrade account or your bank brokerage account, or go to Yahoo Finance or Finwiz, or you could just Google stock screener. Filter on market caps in order to ensure that the company can sustain the dividends that it's paying, and also look at the future or the expected payment date to see if they're going to continue to pay the dividend and how much they're going to pay. Alright, so let's look at my portfolio, see what's been going on. So in my TFSA Questrade, got a total balance of 4,600 Canadian. Let's look at the position. I still have the Ford shares, 235 shares of Ford, right? But that I bought at $10.91. It's trading at $11.37, giving me a profit of $108 or a profit of 4%. But probably gonna sell it at around $12. So I'm gonna hold on to it. ExxonMobil started to go up again. Closed at 78, giving me a profit of $33 or a return of 4%. See, I only have $750 US in Exxon, but I have $2,500 in Ford. Now, if we go to my RSP, I've got the famous mutual fund that pays 20% dividend per year, but the dividends have been suspended until net asset value goes above 15. So I bought it at 669. It's trading right now at 541, and I'm not getting any dividends. This is generating me a 20% loss. I might buy some more at 541. I got Ford options that I bought at 155, closed at 205, giving me a 32% profit or a $100 profit that I'm still holding on to. I'm probably going to sell at 240 or 250. Tesla that I bought at 250, it actually went up to 305. I only bought one share, so I only put in $250. So I'm making 15% return, but $37 in money. But with the fees, I have to wait a little bit longer, or sell when it reaches maybe $325. So that'll give me $75 profit minus $10 fees. So it'll give me $65 on $250. And Walmart that I bought at 86, closed at 87.88. $16 profit and 2% profit. So let's look at any dividend I received. So just go, if you're using Questrade, switch from trading platform to accounts platform. Then go to reports, go to account activity, choose the date that the period that you want to look at. So let's say I'm going to choose August 1st to April 16th. And then I'm going to choose dividends only. So I'm going to remove the others and leave dividends. So I've collected dividends on Qualcomm and Teva Pharmaceutical. So as you can see, they're deposited automatically in your trading account. And I should be receiving ExxonMobil and Ford soon because they both pay out dividends. If we go to my Investor's Edge account, still got Enbridge, of course, that I bought. I don't even remember anymore, but for sure I bought above. I bought once at 50, once at 47, once at 45. Right now it's trading at 41. If we look at our dividends, well, let's do last 6 months. So I collected dividends twice from Enbridge. Once $31, the other time $41. As you can see, it's paid out automatically in your trading account. So that's why I have a cash balance here of $77. If we go to my Canadian TFSA, I've got my Synovus Energy that started to climb back up again. I bought at 15. It's at $12 right now. I've got my Enbridge again. that I bought at 50 and 47 and 45. It's at 41 right now, but I've also collected dividends, and I've got my Hudson Bay that I bought at 13.50. It's at 8.93 right now. This has been a bad choice. I've been holding for a very long time, maybe over a year, and haven't sold yet, waiting for the stock to go back up. If we look at my US TFSA, got General Electric, started to go back up again. I bought it at 17, but it dropped below 13. This one also pays dividends. I got my Kraft Heinz that I bought at 75, dropped to 60, closed at 61 today. And I got my New York Mortgage Trust that pays 12 to 13% dividends per year. So I try to buy stocks that pay a good dividend, so that my goal is to make my return off buying and selling a stock. So that capital gain is the return that I want to make. But sometimes you think you bought low, but the stock continues to drop. So the advantage of buying a stock that pays dividends is, while you're waiting for the stock to go back up, you're collecting dividends, and you're collecting 3 or 4% per year, which is the same as if you were investing in mutual funds at the bank. But you have more potential because you can sell the stock when it goes back up. And that's assuming you're buying stocks from big name companies that are not going to disappear, that have a competitive advantage. So for example, Facebook, when Facebook dropped to 150, that was a big opportunity to buy. Even if it continued to go lower, eventually it's going to surpass the 200s and the 300s. And as you can see, it's trading in the 160s. Even with bad news in the media, the stock is still going up. So that's another proof that the stock price isn't directly correlated to good news and bad news, but the general operations of the company, or the opportunity it has in the market. Everyone knows Facebook isn't going anywhere. They've got millions and millions of users, and it's only growing. Their business model is just great. I think last year they made 15 billion in profit. So just a clean business model, nothing. So when the stock goes down for whatever reason, so in the case of Facebook, it went down because of the data breach. That's a buying opportunity. So if anyone bought at 150 or even 160, they're gonna benefit because they get to sell it when the stock goes up. Although Facebook doesn't pay dividends, but you can sell it when it reaches, I guess, everyone's free to decide when they want to sell it. But for sure, Facebook at 150 was a great buy opportunity. Instead, I bought Tesla at 250. I think it's also a good buying opportunity. We'll see when I'm going to sell it. So I hope I was able to explain how to find good dividend stocks. If you have any questions or comments, leave them in the comment section below. Remember, if you're going to open an account with Questrade, don't forget to use my referral code so we can both get up to $250. Don't forget to subscribe to my channel by clicking obviously on the subscribe button. Thanks for watching.